Welcome. In this video, will Xcn coin make another new high? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The chart reveals a highly notable, consistent, and confidence-inspiring ascending trend structure. This upward trend serves not only as a technical indicator, but also as a highly positive signal in terms of market psychology. The price action's respect for this trend line clearly shows that investors view this level as a strong point of reference. Especially when we look back, we can see numerous instances where the price bounced strongly each time it touched this trend line, almost coming back to life. This suggests that this level is considered by investors as an area of accumulation and strength building. Currently, the price is once again approaching this trend line. The price movements at current levels may indicate that investors are beginning to see this area as an opportunity. Particularly, the fact that this region has repeatedly held in the past suggests that this touch is not coincidental and carries significant technical meaning. The price approaching this strong ascending trend line again offers promising signals that buying interest may be on the rise and buyers may be ready to act. This contact is critical for many investors, both from a technical analysis and psychological support standpoint. In such healthy ascending trends, occasional pullbacks to the support line can often signal the beginning of a major upward move. At this point, the price touching the trend line may also be seen as an opportunity zone where large investors are waiting to rebuild their positions. Considering the strong upward moves seen from this area in the past, the possibility of a pump emerging from the current structure appears quite high. Moreover, the price movement touching the trend line is not just a horizontal pause. It may also be a phase of energy accumulation. The consolidations that occur in this area often result in high-volume, sharp breakouts. And the current interaction with this trend line, when examined alongside technical indicators, resembles a structure that is being drawn back like a bow, preparing for an upward breakout. In addition, the overall market conditions also appear supportive of this ascending trend. Factors such as macroeconomic developments increasing risk appetite, investors seeking alternative assets, and liquidity beginning to flow back into the market further raise the likelihood of a strong upward reaction from this level. Such trend touches can create a turning point in the market not just technically, but also in terms of sentiment. The fact that the price is touching the ascending trend line in such a healthy and consistent manner indicates that the trend still retains its strength. If clear signals begin to emerge confirming that this trend will hold, it could reinforce investor confidence and trigger the market's upward potential. A potential increase in volume at this point could also support this scenario. A high-volume rebound would not only demonstrate that the trend support is holding, but also signal that a new upward wave may be underway. But we cannot make decisions based on trends alone. Let's also take a look at other metrics. Stay tuned. The technical structure forming on the chart points to a classic yet powerful reversal pattern that careful investors will immediately recognize: the inverse head and shoulders pattern. In the world of technical analysis, this formation is considered one of the most reliable indicators of trend reversals. The inverse head and shoulders pattern typically appears toward the end of a downtrend, signaling that the market is preparing to halt selling pressure and shift toward buying momentum. In the current chart under review, this pattern is forming quite clearly, and the price appears to be in the final stage of the structure. The price may have been under pressure and in a downtrend for some time. However, recognizing that the structure forming during this period is a reversal pattern could indicate a potential upcoming rally. In the clearly emerging inverse head and shoulders pattern on the chart, after the completion of the first shoulder, a lower low has formed, creating the head. Then the price recovers again, forming a second low similar to the first shoulder's level, indicating that the final shoulder is about to take shape. In technical analysis, this second shoulder stage is extremely critical, as it is often seen as a strong signal that buyers are preparing to regain control, and the trend is beginning to reverse to the upside. At this point, when we evaluate the overall structure of the pattern, the rebound seen at the first shoulder, the deeper decline forming the head, and the limited pullback during the second shoulder all indicate that sellers are gradually weakening while buyers are gaining strength. This situation is particularly reassuring for large investors and provides a solid foundation for opening positions. One of the most critical elements of the inverse head and shoulders pattern is the neckline, the horizontal resistance line between the shoulders, which is currently very close to being tested. As the price forms the second shoulder, the final stage of the pattern, it is clearly preparing for an upward breakout. From a positive standpoint, once this pattern is completed, the target area becomes quite clear. An upward price movement equal to the distance between the head's low and the neckline is expected. This shows that the potential rally following the completion of the pattern is measurable, concrete, and based on a strong technical foundation. The movements following such reversal patterns are typically supported by an increase in volume, indicating that the upward move is not just a short-term reaction, but the beginning of a larger and more sustainable trend. The current price movements also show that investor psychology is supporting this technical setup. The final shoulder stage is typically when investors most frequently ask, "Is this the bottom?" and closely watch for opportunities to enter positions. If an upward breakout occurs from this region, it will confirm not only the completion of the inverse head and shoulders pattern from a technical perspective, but also the solidification of buying pressure from a psychological standpoint. If this breakout is supported by volume, the price is highly likely to move quickly toward the target area. It should also be remembered that inverse head and shoulders patterns are more than just technical structures. They reflect the behavior and sentiment of market participants. RSI is one of the most trusted and frequently used indicators by investors in technical analysis. By showing whether the price is in overbought or oversold regions, it provides early signals about potential reversal levels. In this context, the RSI indicator turning upward every time it reaches a certain level offers a highly important technical clue for attentive investors, especially when the RSI consistently reacts and moves upward within a specific range on the chart. It indicates that this region has become a sort of support zone, which can be extremely valuable for evaluating short and medium-term buying opportunities. When analyzing the RSI indicator on the chart, it is clearly seen that each time it touches a certain area, specifically the lower band, it gives strong upward reactions based on past price movements. The repeated occurrence of this behavior and the formation of a kind of cyclical pattern provides investors with a significant strategic advantage. Investors who recognize such levels in advance can act when the RSI reaches that level, gaining the opportunity to enter positions at the right time in the market. In this regard, drawing a green box at the level corresponding to the lower region of the RSI indicator represents a very logical and forward-thinking approach. This green box essentially marks a technical area that could be defined as the RSI's reversal zone. The fact that the indicator has touched this region multiple times in the past and then made strong upward moves clearly demonstrates the technical significance of this level. In technical analysis, one of the most valued characteristics is the presence of repeating and consistently effective zones. Such areas provide important insights into the nature of both price and indicators. The lower RSI region enclosed within the green box on the chart has been tested several times in the past, and each test has been followed by a strong upward reaction from the RSI indicator. This indicates that sellers are weakening at these levels, while buyers are stepping in aggressively. Let's pay close attention to this box on the RSI. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.